Hello all, welcome to Your Schemes. I'm Ilakya. I hope you are all doing well. SIP, Systematic Investment Plans. SIP are an effective way to invest in mutual funds. They offer the convenience of regular investments and the potential for long-term wealth creation. When the markets are low, you get to accumulate units at discounted prices. When the markets are high, you get a profit. However, before investing in SIP, it is crucial to understand certain aspects. So in this video, we will be seeing 7 things you must know before investing in an SIP. Without further ado, let's start the video. Let's start with first one, choose the right mutual fund. You need to do your part of research and select mutual funds that matches your investment goals and the risk profile. You must know how much risk you can tolerate. Please consider factors such as fund performance, asset allocation, and the fund manager's track record and the expenses ratio. You can lower the risk by diversifying your fund categories. To diversify fund categories, you must understand fund categories. Mutual funds offers various categories like large cap, mid cap, small cap, balance funds and sector specific funds. Each of these categories has its own risk and return characteristics. So depending upon the risk and the returns, you must select the fund categories. Assess fund performance. Before selecting mutual fund, you need to analyze the historical performance. Performance of the mutual fund should be consistent. That means it should have demonstrated strong returns over different market cycle. It is important to understand that past performance is not a guarantee of future returns. Evaluate expense ratio. Expense ratio is the fees charged by mutual funds for managing your investments. So, if the expense ratio is low, then you will get higher returns over long run. So, please compare the expense ratio of similar funds and choose the fund which has low expense ratio. Selecting SIP frequency and amount. Selecting the frequency depends on your financial goals and cash flows. In most cases, monthly investments are most common, but you can also select quarterly or weekly SIPs. Keep a long-term perspective. As you know, SIPs are designed for long-term wealth creation. You must be consistent and disciplined. Please avoid taking investment decision based on short market fluctuation. Stay invested for long haul to benefit from the power of compounding. Last but not the least, monitor and review your mutual funds. It is very important to monitor your investments periodically. SIP returns can be either negative or positive based on the stock market. So please review the performance of your mutual fund and make the necessary adjustments. Remember, SIPs require discipline, patience and regular monitoring for long-term wealth creation. If you are new to mutual funds, please check this video of top 5 small cap mutual funds and subscribe to Your Schemes for more similar mutual funds videos. If you feel this information was helpful, then please leave a like and share it with your friends. If you have any doubts, you can write us to yourschemes@gmail.com. Thank you. Have a good day. Bye-bye.